Hello, everybody. Hi, guys. We are just about to start. How you doing? Good morning, good evening, good afternoon, whatever the time might be in your part of the planet. Um, Hi, guys. Feel free to use the chat to say hi and where you're from. So, welcome to the day 3 of our 5-day challenge. So, it's already day 3. Time flies. Again, just for our friends watching the live stream on YouTube or on our Facebook page, feel free to use the chat there as well. So, hi, Rakesh. Let's just see. Hi, Farah, William, John from Port Elizabeth, South Africa, Chucks from New Jersey, Randy, hi, Mazen from Iraq, hi from Romania, from Johannesburg, Victor, Rakesh, hi, Jan from Malaysia, hi, Jan, good to see you again. Some nice trades you showed us yesterday. Dodd, hello from beautiful British Columbia, Canada. Hi, Benji, hello, welcome back. Benji, hope you had some more nice trades. Benji from Virginia Beach, all right. From Florida, Mike from Ecuador, hello, Michael from New York, Rudolph from Germany, Ken Dixon, Michelle, PG, and so on and so on. Hello, everybody. There's so many of you. Hello from Canada, Mark from US, Denver, Colorado, Ken. All right, from Somalia. Hi, hello from Ghana. All right, Bogdan from London, Cooper from South Africa, and so on and so on. Hello, everybody. So today we are continuing where we stopped yesterday. Just a small reminder, if you have missed some of the previous days or the downloads, you can find all of that on our page www.acceleratingprofits.com. So any downloads you missed or webinars, you can catch them there. So again, today with us is Adrian Jones. He's the CEO here at Tradeology, a full-time Forex trader, educator, content creator, and he has helped so many people to become more successful traders during many years. So without further ado, Adrian, hello, how are you doing? Can you hear us?
Hi, yes, I can. Thanks, Amir. I'm hoping everyone can hear me. Hello, everybody. I think Amir's run through so many names, I won't repeat just to save a bit of time, but it's encouraging. You're all from all over the world, and I appreciate the time that you're spending with us today. A lot of my fellow South Africans seems like on as well. Welcome to you guys. And many on here that I see have been following us for the last few days also, which is fantastic. That's what I would like to see, a progression that we are constantly learning together. Some of us on here today might be here for the first time, as Amir said. If that's the case, of course, you're welcome to attend. But some of the information I might share with you today, you might have to catch up a little bit for the last couple of days. And those recordings are available on a page which I have mentioned, or Emir has mentioned. I'll mention again later on in the presentation. So thanks, guys, for joining, and hello. Now, what I'm going to do is I just want to get my presentation prepared here, and I'm going to share my screen with you. Now, of course, I think Emir has already mentioned it. There is a chat box where you're welcome to ask questions later on in the presentation. Emir will feed some of those to me because I don't have access to them all while I'm doing the lesson. So let me just get this set up for you quickly. And there we go. Now, we're on the 5-day Forex Challenge, day 3. And surprised how quickly time goes, isn't it amazing? And today we're going to learn a few things. We're going to learn firstly a few more trading facts to use to mitigate your risk. Each day over the last couple of days, I would begin the presentation just giving you some interesting facts that could help mitigate your risk. And I'm also going to give you yet another free trading system, my gift to you today. And this is in addition to the profit wave, which we were using for the last couple of days. And I'll be presenting more about that a little bit later in this webinar. So please do hang around for that. I'll show you exactly where to get it if you haven't yet done so. It's only just been made available a few hours ago. So I gather not many of you would have done that just yet, but I'll let you know more about it. All right. So just a reminder also about the action steps that we've been taking for the last few days. Sorry, I just want to move this Zoom thing out my way here. And there we go. So each day for the last couple of days, I've been asking that everyone on please do certain steps. I'll set out the steps for today at the end of this presentation also. And to those of you who have been sending in your trades and have been commenting on our page at www.acceleratingprofits.com, thank you very much for that. It shows me that you are engaged and that you are actually participating. There's still obviously a chance for others to do so, and I'll mention it again at the end of the presentation. Now, I just want to share with you a few. I've had a lot of people email me through yesterday as I requested. There are many comments on the page, and there's a lot of emails that have come through. I'm just going to share some random ones with you. I don't want to keep us all here looking at these, but Rakesh, thank you for sending yours, for example. And just for Rakesh here, he was trading on a demo account of $10,000, he says, and he placed a trade during or just after yesterday's presentation. And when he came back on in the morning, he saw that he had made 159 pips with the profit wave. So he made $70, in other words, after you took out the swap value there. So well done, Rakesh. You have been trying out the system. He claims it works very well for him, just like I said. Thank you, as long as you follow the rules. And hopefully you're on tonight as well. Thank you, Rakesh. And of course, there's some others also, just randomly. Ben T had also, you'll see Ben had sent me in a screenshot of his laptop, which is fine, with showing that he had taken a trade. And he says, yeah, even smaller accounts can make money too. Proof attached. Thank you for your time. So great. And I see you made $10 on that trade, Ben, on a small account. So well done to you. And Jan, hopefully I'm pronouncing your name right, Jan, from Malaysia, says his prayers answered. I'm his guru from now on. Thank you, Jan. Well, he says he's been trading for 2 years now, but he couldn't really get to grips with it, looks like. And after the first webinar, he made 150 pips. And he could have got 200 pips, he says, but he closed early because he wanted to attend my second webinar yesterday. Oh, right. And thanks very much for that, John. So similar to this, I'm going to encourage you all at the end of the webinar also, if you haven't yet done so, to continue sending me in. I do look at every single one of them. Any screenshots, any trades that you've been taking using the profit wave or with the system that I'm going to give you today. Either of them is fine. It helps me to understand that you guys are taking steps. And as I said yesterday, we could be on call, on videos all day long, or on live webinars, but unless you take a step, you're going to be stuck at the same place, right? So we want to have some action taken, which is why I call them action steps, so that we do progress. Now, before we move on, let me just share with you something that I'd like to do today. You'd know by now that I'm very interested in stats and sharing stats with you over the last few days. We've had up to our eyeballs in that kind of stuff, but that's really what I thrive on. And I'd like to get to know the people on here just a little bit better so that I know whether I can improve. I want to be constantly improving in my education for traders and so on. So if you don't mind, I'm going to it'll just take a minute, and a poll will shortly pop up on your screen. It's just going to ask you 5 questions. They're not personal necessarily. I'm not going to ask for any of your personal information, don't worry. But it's just to give you, or to give me, an understanding of who all is in the group, what is it that they like and don't like, whereabouts are they. or are you? And towards the end of the presentation, so that everyone gets a chance to obviously answer, I'll then share this with you at the end. So let me just see if I can do that now. And what I'm doing now is launching this poll. So it should hopefully pop up on your screen, just a summary like box, a little green box. And there's a few questions in there. Shouldn't take too long to answer. One is, what is the biggest trading challenge for you right now? And then you've got a few choices there if you could select one. Have you traded the profit wave yet? Just out of curiosity, I just want to get an idea of how many have actually tried it out. And we're currently using Zoom, as many of you would know. Some of you are streaming from Facebook, of course, and so on, but the majority are using Zoom. Please, would you let me know whether or not you find that this is a suitable style for presentation, or are there other, would you prefer a different type of webinar for future presentations? Or would you prefer that I do everything entirely on Facebook or YouTube or whatever the case? It just gives me an idea going forward, perhaps not for this particular challenge, but definitely for other presentations. I'll do what it is that people like or don't like. And whether or not you do have a Facebook account, just yes or no. I won't know who's actually answering these questions, so don't worry. I'm not trying to gather or garner your personal information here. Just need a general idea for what people are thinking. And then I'll share this with us all later during the presentation. So I'm going to leave that open for now. There is, I think, because as an admin, I can see that I can drop down this little box here. So I'll give it another few seconds. I see we've had it up for nearly 2 minutes already. Let's give it 10 seconds. I see some people are still typing in. Of course, not everybody is master of the English language. So let's just give everyone a chance. And I think by now, after a couple of minutes, most people would have. So I'm going to end that poll now, and then I'll share the results with you a bit later. We'll analyze it and see what we can do to improve going forward. All right. And right, so I'm going to just get that off my screen. So thank you for that. I appreciate your input there, guys. And I'll analyze that with you in real time in near the end of the session. So let's begin with today's lesson, and before we get to the free system. So I'm building on again from the past 2 days. Now you'll remember in webinar 1, day 1, we covered some interesting facts about Forex, which I thought could help you determine at least where you are, the starting point for you, how you fit in, and not to feel left out if you're in any particular category. And then we also, of course, shared the profit wave. Then yesterday, I took that a step further with some other presentation with certain more statistics that I think would be helpful for many traders. And I also showed you a technique that you could use with the profit wave system with support and resistance. Now that technique, remember, you can use that with any trading system, including the one that I will show you today. And so I'm not going to repeat that entire lesson on how to use it with this next system, but I'll get into that in just a moment. So let's just begin with going through a few things that I think, especially for beginner traders, that you would need to know to fast track your trading success. So trading facts to use to mitigate risk. And you'll keep hearing me talk about risk because we're trying to, there is risk, we know that by now, and we are trying, when we're trading, to leverage our knowledge to mitigate, to reduce the risk as much as possible with every trade we take and with our trading plan and how we go forward. So let's get going then. I'm going to tell you a few facts and some interesting details regarding each of these facts, which even if you are a trader who's been going for a while, you might not know. Now, trading fact number 1, we've got something called a risk to reward ratio. And you might have heard me say that during the profit wave presentation. And you will see that also in our new system that we're going to share today, that I talk about risk and reward, or one-to-one, and so on. And you might not know exactly what that means. So it's a key concept that every trader should know. And the risk to reward ratio, or sometimes presented as risk semicolon reward, is basically a measure of the money at risk on your trade versus your potential reward. So how much are you risking in order to get a certain dollar reward, profit at the end of the day, per trade? Now, this might seem obvious, but I'm going to just go through it. If I'm risking $100 on my next trade, and my take profit, my target, is at $100. So I'm risking $100 to make $100. Then I have a risk reward ratio of 1-to-1. So when we're talking about 1-to-1, that's what we're saying. We're saying you're risking an equal amount to what you potentially will gain at a 1-to-1 risk to reward ratio. So now if I'm risking $100 on my next trade and my target, I'm hoping to make $200, then I have a risk to reward ratio of 1-to-2, right? And if I'm risking $300 in order to make $100, then I have an inverse risk to reward ratio of 3-to-1. So you're risking more than what your potential profit will be. Now, so we could say that if your trading strategy has a negative risk to reward ratio, such as that 3-to-1, you're risking more than what you, excuse me, than what you can potentially gain. You have, in that situation, a 300% more chance of losing money versus a trader who's using an even or positive risk to reward ratio. Okay, so you should be realizing by now two important things when it comes to setting profit targets and any trading strategy. And that is that we should make sure, whether you're using the systems that I'm giving you this week or any other system of your own, you should ensure that you have a minimal target, generally a minimal target of 1-to-1 risk to reward ratio on every trade. There are exceptions where sometimes you would like to get out to the market early. You might have a different exit strategy that applies for a particular trade. But generally, you want to make sure that any system that you are trading has at least a target ratio of 1-to-1. Do not sacrifice your risk to reward ratio and take it to negative just to increase your percentage accuracy, right? So you want to make sure that you don't try and reduce the target ratio to your risk just to increase your accuracy. So you might say, well, I'm going to risk this big amount just to make the small trade so that at least I've got a better win. You know, then I can say I've had one win. So I risked $100 to make $10. It was a quick trade. At least I had a win. It's still, in the end, not going to work out well for you there. Okay. So trading fact number 2, risk of ruin. Okay. So with what was once originally designed for casino games, believe it or not, the risk of ruin, ROR, you might hear this coming up very often in your own research and learning. The risk of ruin, ROR, is one of the most important trading statistics that you need to know. To put it simply, the ROR will mathematically tell you in one statistic whether you are going to make money or blow up your account. Now, blowing up your account basically means you lose all the money in your account, which is possible, right? There is always a risk. Now, the risk of ruin basically looks at your overall payoff ratio, and I'll show you just now how that works, or average percentage risk per trade, or average risk per trade, your percentage accuracy, and your percentage risk per trade. Now, over a sufficient number of trades, if one had to take 100 trades or more, for example, I would say even as little as 40, but 100 trades or more, you can determine your risk of ruin. And though, based on your current trading strategy, whether you will make money or whether you will blow up your trading account. In other words, whether you're going to lose all your money. So on average, the best sufficient number would be 100. You could do it from 40 onwards, but 100 trades basically will allow you to see your risk to ruin. So let me show you a table just now showing the risk of ruin statistics. Now I'm going to use a base of 1% risk per trade, which means that if, for example, you had a $1,000 account and you were risking for one trade $10 on that trade, you'd be risking 1%, right? If you have a smaller account of $100, then obviously you'd be risking $1 per trade. And measuring then various payoff ratios and accuracy percentages. So I'm going to show you that table in a moment. While I'm on here, though, I want to also mention that when you are risking a percentage of your account per trade, which you will always do when you're trading, that especially beginner traders, I saw that in a comment or an email over the last day. What would I, as a beginner, what should I risk? What should my percentage risk per trade be? Well, between 1% and 2% per trade would be what I would suggest, strongly suggest, that you risk for every trade that you take, not more than that. Now, more experienced, more advanced traders will risk anything up to 5% per trade. But what we'll see also is that it's not just the percentage risk per trade. You should try and keep it low if you're a beginner, 1% to 2% on a demo or a live account, just so that you get used to it. But you should also not be swapping around, with one trade being at 1% risk, the next trade being at 5% risk, back down to 1% risk, and so on, because eventually you will end up losing. So whatever your percentage risk per trade, try and stick to that at all times as much as possible. And if you do change it, then stick to the change that you made for that, right? So here's a graph, and I just wanted to show you in particular the left side of the statistics here. Now, why do I mention that? A few days ago, I think it was in day one, I was asked, what is the best win ratio? Now, when we're talking about win ratios, we're meaning the amount of trades. And remember, we're looking at 100 trades on average, with 1% of our account per trade being taken. A win rate would mean that if you've taken 100 trades, how many of those hundreds did you win? Not the amount that you won, just how many did you win? And how many did you lose then, obviously. So your win ratio will tell you the percentage winners. So in this case here, on the left-hand side, you can see it starts off with 10%. Obviously, if it was less than 10, you haven't won anything, basically. So it starts off at 10. And then it increases all the way down to 95%. And it stops there because there's no one on this planet who's got a 100% win ratio. Now, what you can see, interestingly, is on the right-hand side here, the green part will show you what your chances are if you have a win ratio of 50 or more percent, 55% or more, let's say, 55% or more, you have a very good chance that you will not blow your account. It's almost zero, provided you're following other strategies and risk management techniques and so on. You should have a very good chance of not blowing your account. Now, a win ratio of 40%, 35%, etc., downwards, you increase your chances of 100% blowing your account over time. It might not be within those 100 trades, but it will eventually, statistically, you will end up losing that account, losing your funds in that account simply by picking losers. So you want a win ratio for any strategy to be at least 55%. I would say 60% would be good. You can still win at just over 50% most of the time, but you want your win ratio to be as high as possible. And I've mentioned already that the strategy that I gave away, Profit Wave, we're looking at on average about a 70% win ratio there. And the one today will be similar to that. It does depend on the market conditions at any one time, and I'll get into that in just a moment. But that allows you at least the confidence to know that if you've got a good strategy, a good system with a good strategy in it, then you have a very good chance of at least making some money. Now, most traders aren't aware of that. They don't even know what the win ratio of their strategy is. Even if they developed it themselves, they haven't been keeping statistics about, out of the last, for example, 100 trades, how many have I actually won? Okay. So if the box is red here, you have obviously 100% chance of blowing your account. If the box is green, you're going to make money trading. And then it basically tells you the percentages here. But why I'm showing you this is just, I wanted to answer for you just how probable it is that you're going to blow your account with a lower win ratio, right? So you want to try and get to win at least in the region of about 55% of your trades. Now, what you're looking for in your ROR, of course, is, as you would have seen on that graph, is a 0, meaning that you would hopefully have as close to 0, let's say, a chance of blowing up your account. You'll need to know your risk of ruin, right? So you need to know that, and at least we fast track that for you if you are trading our systems here by saying you know that you have a good chance of not blowing your account, provided you follow the strategies. Now, the next trading fact is you have to have a trading strategy that's durable. So it might be usable for maybe a month or two, excuse me, or it could be durable for many months, for the very long time. So it's no good having a strategy that's going to help you just for a week or two, and then it doesn't win after that for whatever reason. You want something that no matter what the market does, no matter what flux the market is in at any given time, that the strategy is strong enough to withhold that and be durable. Now, once again, obviously, I wouldn't be giving you anything that wasn't durable. So again, we're fast tracking you there with having a durable system. The durability of your trading strategy, excuse me, is critical. So if you are trying other strategies out there, you want to try and investigate whether they are durable or not. Just because somebody said that they just made 100 pips on the strategy does not necessarily mean that it's durable. It might have been good for that time. Maybe it was a fluke. You want to be sure that it's durable, okay? And this is because, as I mentioned earlier, the markets are always in flux. So that means that your accuracy percentage and your performance will also be in flux. And what you want to try and do then is operate within a range. You want to have a strategy that will operate within a range, so that if there is a flux, your win rate might drop, might increase, but it will always stay within a certain range. And so if your trading strategy, as per the graph that figures that I just showed you just now, is 60% accurate on average due to winning and losing streaks and so on, your trading strategy is likely over time to fluctuate. It'll never be constantly just exactly 60%, but it could fluctuate in terms of accuracy between 50 to 70%. So 10% either way. You want to give yourself that leeway. So again, if the strategy that I'm giving you today, for example, is 70%, it could fluctuate for some and at different times to be as accurate as 80%, and at other times lower, down to 60%. So it is in flux, as is the market, but at least you have some kind of an idea that you're within a certain range, and your probabilities of remaining accurate are greater. So it's important to have a strategy that, if it underperforms, can still have enough margin of error, as I mentioned, not to get down to that 50 and below win rate to make money trading. Now, what we have just learned about the risk of ruin table, did you notice any patterns when it comes to profitability? Perhaps if you can just, if there are any comments, please put them in the chat, and Emir will let me know.
We do have a couple of questions already, if you want to.
Oh, okay. Just more about the answering of the question. Did anyone notice anything particular as far as the patterns are concerned? I will get to the questions, of course. What I'm trying to say here is that you have more ways to lose money at lower payoff ratios and significantly less ways to make money trading if you are targeting short and if your system is has a very low win rate. All right. So the greater the payoff ratio, the more ways you can make money trading, and thus you have a smaller window to lose money. All right. So a good trading strategy then should have, at least, as I mentioned earlier, a payoff ratio equal to or greater than 1 to 1. So remember that with any strategy that you are testing, on average, it should have a payoff ratio equal or greater than 1-to-1 for the majority of the trades. And we do have that with our systems here, but just in the event that you are trading other systems, just to be aware of that. You'll have a much easier time handling drawdowns and recover faster when you get back on track, and that increases your durability. And I'll answer some of the questions then just at the end of this, Emir, before we get to the actual system.
Sure. If you want, there are a couple of posts here from
Sure.
William. 5-to-1 seems the best for him.
All right.
Charles, the higher the profitability, the greater chance of blowing account. Howard, the greater the risk reward, the less possibility of going broke. Ken, a greater return equals a lower risk of ruin. Howard, actually, the better the reward to risk, the better. And Chris asks, is 1-to-1, is it actually inefficient? And Dodd says 1-to-1 makes sense to him.
Yes. Now, in different times, and depending on your advancement, your advanced status, shall I say, as a trader, of course, traders do trade at 1-to-5, 1-to-3, 1-to-4, etc. Now, in the current market conditions, and remembering also that most people on here are beginner traders, they're still learning, you're still getting to grips with things, the 1-to-1 would be what I would recommend, and why I've set these systems at that 1-to-1. The market is volatile. It will move up and down, and you have to at least know enough about the markets to be able to check your strategy if you are taking a higher risk to reward ratio of 1-to-3, 1-to-4, etc. 1-to-1, even 1-to-2 at this stage should be sufficient. You will still make money. The chances of you having a good win rate are equally as high at this point if you keep to the 1-to-1. And as I mentioned, I think yesterday, we're trying to run a marathon, not really a sprint. I keep saying that to all my students as well. They're probably sick of me saying that, but we're looking very long term, right? So if you're on a lower time frame, 1-to-1, the market can change quickly, can turn against you. You want to be sure that your targets are relatively tight. And that gives you enough room to breathe as far as your stop loss and your take profit target is concerned, and definitely to learn the system. That is what you should be doing at all times when you're on the charts. So hopefully I've answered that, and answered some of the others as I was going through that. Now, what I've noticed also, and this is not a reflection on you, but or anyone on here, but just over time, over the years, most beginning traders are poor learners. It's not to say that they're not intelligent people. I'm saying that they're poor learners. For some reason, when going through the Forex market, it's just seen as something that you can quickly learn and get finished with. And there's no dedication to properly take in what it is that you need to know to become a profitable trader, a consistently profitable trader, right? And I think the fact that all of you are on here today tells me that you are not poor learners. You are here to learn, right? So the majority we heard yesterday over the 12 months, past a year or so, majority of new traders have not really done any kind of studies at all, not been on any presentations, they've just basically read a few things and not really gone into it at all. And that's a recipe for failure. You know, you will then walk away from it saying, I learned nothing, and trading doesn't work, and so on. And of course, there's a bit of effort that needs to be put in, as in attending presentations of whatever type, and so on, in order to become a better student, right? So as I mentioned, I've been able to collect a lot of statistics. I love statistics, as you heard me say earlier, on our students, particularly when it comes to trading performance and how they train. Now, one pattern I noticed is that most beginner traders are poor learners and have bad learning habits, as I just mentioned. And why do I say this? When students, for example, on some of my courses, they would buy a course, an online trading course, And one of the first things they would receive is a welcome mail. Now, if you are one of my students and you're on here, that's no bad reflection to you. Just generally, people that have just started, they're beginner traders and they've just purchased something, one of my courses, for example, they receive a welcome email. And in this welcome email, I'd explicitly say to them, please go watch this video because it contains key information on how the system works and other relevant details. And how many students do you think actually watch the video? Just put a number in there, guys. What percentage do you think? All right, let's have a look. Around 1 in 5. 20%. 1 in 5 actually would make the effort to open up a video. That can tell them very important facts about the trading system, right? So what I'm trying to say here is, you know, when you're starting out, go in it with your boots on, fully immersed, and not half-hearted. Because what you miss out on in the beginning when you are trading can influence your whole decision, your whole outlook on a system, your whole outlook on trading generally, perhaps even your whole future. So you want to go in fully strapped in, ready to go, right? That's just me trying to encourage you to do that, right? Because I think that's vital to know, right? And how many students actually follow step-by-step instructions in order once they've got those instructions? Anyone got a guess? All right, so a lot of different numbers there. About 1 in 4, so about 25%, very similar to the how many open the video. So people aren't taking the step-by-step instructions. So it's vital that when you are learning a system, for example, like any of the systems that I've given away now, that if there are certain rules, follow those rules in sequence, each of the rules, not just selecting one and leaving out the other and so on, right? From this, I think we can make the conclusion that most beginner struggling traders are poor learners. As I said, not unintelligent, just saying poor learners in how they're approaching learning. So again, I'd ask, you know, would one normally read a book out of order in terms of chapters, skip from chapter 1 to 5, back to 3, and so on? Oops, excuse me. No, you take it step by step as it's been laid.
Hi guys, sorry, seems Adrian is having a bit of a technical difficulty. Let's see if we can get that sorted as soon as possible.
Gosh, I'm back. Sorry about that. A lamp fell over and it cut me off. So I'm not too sure what last you saw there, Emir. Could you let me know? We were busy with the lessons, right? So
just last minute.
Last minute? Oh my goodness.
Yeah,
okay.
Less than that. 1 minute tops.
All right. Well, I'll just repeat. I was busy summarizing here anyway. There are many likely reasons why a person wouldn't be a good student. But one is that you might be trying to sacrifice your learning process by being impatient, essentially, right? So you don't want to be impatient. You want to take the necessary time to go through the learning process. In other words, not skipping through the rules for a system. If a system has got rules, that means it's a good system to begin with. But take the time to go through step by step the various rules. Rule 1, Rule 2, Rule 3. Don't skip one of the rules or come back to another one out of sequence or out of order, because most likely then you're not going to learn how to trade the system properly, whatever system it is. And that's when many traders give up hope. Impatient, fear of losing out. They, you know, you want to make $1,000 by tomorrow. You don't have time to learn the system. We shouldn't be looking at it like that. We've got to have patience, a bit of patience, and put in a little bit of effort and just follow the steps, especially with what I presented. You know, just follow the steps. That's all I'd suggest to you. And doing so would decrease your chances of, otherwise would decrease your chances of making money trading, right? Proper risk management. And for this, we'll be analyzing our trading performance over a number of trades, as I mentioned earlier, and finding ways to make more money trading is vital to profitability. So of the thousands of trading accounts I've analyzed, how many traders are using consistent risk management at first, do you think? Out of people that have just joined or taken part in any of my free or even paid courses, how many of those traders, when they start out, do you think are using risk management, are trying to manage their risk?
Benjamin say 10%, Ken 25, Farhana 20%, Gene less than 10.
All right.
Chris 15, Gary 10. So around 10 to 15, I would say, would be the average of
right. It's 1 in 3, so it's 33% are not using consistent risk management. Now, not to say that they're not using any kind of risk management, but they're not doing it consistently, and perhaps not at all. So 1 in 3. So I'd presume that based on my analysis of these thousands of traders, that out of the few hundred on here also, that we have very similar situation where probably only 1 in 3 of you. So actually, sorry, it's 1 in 3 that are actually using it. So there's a much higher percentage who aren't. It's 66%. Now, just if that's the case, then that says to me the majority on here are not using proper, consistent risk management. And if you've been around for a while and are wondering why you are failing with your trading, you've used, I don't know what systems and so on, why am I not profitable? What's going on here? It's most likely one of the reasons is you are not using proper risk management consistently. Now, what do I mean by consistent risk management? Perhaps you're asking. So that's risking the same percentage equity, for example, per trade. And I mentioned this a bit earlier, right? So if you're going to trade $1,000 and you're saying, well, I'm going to risk 1% of my account. Remember, I said 1 to 2% for beginner traders would be sufficient while you're learning how to trade. So you're going to be risking, say, $10 on that particular trade. Now, are you doing that consistently with every trade using the same percentage equity? Now, to put it simply, if you're not risking the same percentage equity per trade, then you could be risking more on your losses. So you could be losing more, or you could be risking less on your wins. So you might be taking a huge trade, let's say $100 out of your 10% of your account as an extreme, and thinking, well, I'm going to win this, but when you lose, well, you're going to lose quite high, right? And then the next trade you make, you bet maybe 10% and you win. Well, then you might have a certain win rate, but your percentage of your losses, your equity, is much lower because you've risked more on the trades that you lost than those on that you won. So hopefully that makes sense. But basically what I'm trying to say is keep your risk percentage per trade almost the same consistently, 1 to 2%. If you do change it, stick to that, and you will definitely be able to conserve your account that way. Conversely, if you want a surefire way to blow up your account, constantly change that risk percentage, and that's how you will end up failing, right? So I don't want that for you, obviously. I'm pointing out negative things here, and I hope that you see the positive of it based on how I know people are trading at this point, from my experience. So I want to share that with you. And you want to make sure that you have a consistent risk management system and fixed percentage risk per trade. So even with a 60 or 70% win rate, you want to make sure that you are also risking only a certain percent per trade on any trade that you do. Now, how to absolutely fail at trading, right? And I'm mentioning this not because I want you to, but because reverse psychology, in a sense, this will tell you what not to do. And I think that's just as important to know as what to do, right? So try to make money trading without risk management and money management. I can guarantee you will lose your account. So if you want to fail at trading, that's absolutely go ahead without any data, that's statistic to support your decision. But the good news here is that you guys on here have already had so much, I think, by way of stats and data that many traders have never seen before. Even those that have experienced trading, who might have been trading for a while, You might say that they're experienced, but they're not really experienced at making money trading. And it's all about the data. It's about understanding your system, no matter what it is, taking note of the trades that you do make. When you do trades, go back in your account history. Just take a note. How many of those were trades were winners? How many of those were losers? What were the amounts? And see if you can determine that there's a pattern in how you are trading, whether it's with the system or any other system. Was one day different to the other? Why was that? Oh, I was trading 3%. All the other days I was trading 1% of my account. That could have made a big difference at that time, right? So there's many ways to do it, but try and be analytical and data-centric in how you go about your trading. You don't have to be a maths wizard to do that. I know some might be thinking, well, I'm not good at math, but you don't have to be. You just have to know the basics. Did I win? How many times did I win? How much money did I make? How much money did I lose? And keep details on that. So again, I'd suggest looking at your own trading data to see where you're at. This will give you a partial roadmap, at least. You have a basis to know where you're coming from on how to become a profitable trader. And then you can work at it from there. You can say, right, my win rate is not high enough. I need more wins. I need to lower my risk to reward ratio. It's too high. It's a 2-to-1. I need to come down to 1-to-1 for the current market conditions. I need to only risk 2 or 1% per trade of my capital, my equity. So that will help you. These sound like small things, but they're actually quite big. In the bigger scheme of things, they are actually vital. And beyond getting the stats, it's also ideal. And I mention this mainly because I believe it to be true. Having an experienced trading mentor to give you some feedback, to evaluate your performance, give you quantified feedback on how you're likely to improve your trading and even to educate you a bit. Now, I myself, didn't stumble into Forex and within a month was from nothing a fantastic trader or anything. I was also mentored over time by various people. In my day, there were very few people that I could have actually gone to for that. But I did take in lessons. I learned from those who have gone before, so to speak, those who have got the experience. And many would see me also as an experienced mentor. And exactly what I'm trying to do is hopefully mentor you to a certain extent on within the time that we have to improve and evaluate where I can the performance and give you some feedback on that. So the feedback I'm giving you now is from my years of experience with people that are in a similar situation to you right now. Right. So I think a lot of it would pertain to you. It's difficult, obviously, with everyone on here to give everyone an individual evaluation within these 5 days, but I think you can self-evaluate to a certain extent by looking, engaging, as I said, where you are, where you fit in with all of this. Where do you need to change your mindset? What do you need to shift as far as that's concerned? So the feedback that can be given is, to help to correct your trading mistakes, and can often be the difference between winning money and losing money trading. And hopefully a lot of you have noticed, I hope, that's my intention, is to give you some value during these lessons, right? So a mentor or somebody that knows what they're talking about, helping you makes a big difference and it can also shorten your time than you fiddling around, trying to figure out who should I listen to, is this person right, is that person wrong, not really understanding what it is that you're listening to or learning. So it's basically, in a sense, what I'm doing for you right now, right? So from whatever source, but as long as you are getting some kind of guidance from somebody who knows what they're talking about, that also makes a big difference in the whole thing. Now, I'm going to now give you another system in just a moment, and I will continue with this series of education also tomorrow. And I'll take it a step further then also with certain interesting facts, but I think we've spoken a lot about facts right now. And I'd like to also then tell you what's going to come about in the next few days. I'm going to be giving you a tool in a few days' time that will be free, and I will explain to you how to use that. It's going to help you to take down the data, to analyze your data, But first, I want you just to get used to knowing the systems and so on. And then by the time you get this tool, you'll know exactly what I'm talking about. So in the next couple of days, we're going to get something very exciting that I'm sure would help many of you with your trading, all right? So that's something additional that's going to come out. And just before I carry on, before I get to the second system, the Astral Trend Finder, any other questions or anything urgent that I need to maybe address with anyone there that you can see, Emil?
We had a couple of questions. Not sure if you want to take them now or after the system presentation.
Let's do them now so that they relate to the different section of the webinar. Okay, go for it.
So T says, this is, here's the question. My biggest challenge is psychological. I do great on demos, but when I go live, I freeze up.
Yes. Yes, it seems like a statement, but kind of with a hidden question in it. So what can I do about that, right? Now, I've mentioned this before, when you are trading live, especially when you're trading with a real money account, the psychology is different. And there are many reasons for that. The one is that there's the fear, of course, of losing real money. Once you've got your skin in the game, so to speak, the money's down. It's no longer, I wouldn't say a game, but it's no longer just practice. Now you're in it for real, and you are trying to make a living out of it, or you're trying to reach a certain target for whatever reason. It becomes real, right? Which is why I say when you go onto a live account, if you haven't yet traded one, trade with a small live account to begin with. $50, $100. It's just to get the whole psychological thing into play. And one of the big things that I think I mentioned also in day one is that you want to have a certain amount of discipline. You want to say, right, treat this like a business. That's why I mentioned it that way. You've got to treat it like a business from the psychological point of view, and then you will behave as if it's a business as well, right? And you'll be looking at things closely. You'll be looking at your risk. You'll be looking at your data. You'll be trying to figure out, where can I improve? How can I become more profitable? And it's exactly the same with a traditional business in that sense, right? Except you don't have all the other overheads and what have you. So, your biggest challenge when moving forward, I think, would be, number one, having confidence in the system that you are trading. Trading it enough to have confidence in it. And knowing that the system provides you with good risk and money management. And thirdly, also your discipline. So if you are going to set yourself the goal, as I mentioned earlier, be the best student you can be. Learn up about things. Don't try and skip steps that you need to take. Just be disciplined in how you do that, and be disciplined in how you trade. When you sit down, if there's any distractions, anyone around you, you've just had an argument with your spouse, the kids have been playing up, there's some issue, you've just had an accident with your vehicle half an hour ago, whatever the situation, you're not feeling well, something along those lines, then step back, don't trade at all. And if in any doubt about whether you should enter a trade or not, just step back, step out of the trade, walk away from it. Come back when you feel that you are able to address what's in front of you and focus solely on that. And I think that would be one of the things that I could tell you. Was it T? T? If you haven't been doing that, yeah.
I would just like to add, there's something Mike wrote, and it sums up so much of the complete Forex trading. It's a great sentence. Don't take the trade unless you are willing to lose the trade.
Exactly.
So nice one there, Mike.
Yes. When in doubt, stay out. And I'd also say never trade with money that you can't afford to lose, right? So you don't want to be trading also with your rent money, for example. And I know many would try and use it like that. Don't gamble with the money. You don't want to see this as gambling. It's not gambling, it's trading, right? So people sometimes come in, especially the beginners, with the concept that this is some form of gambling. No, it's anything but. It's in fact exactly the opposite. You're trying to mitigate your risk as much as possible by using techniques, indicators, statistics, and everything else, and treating it as a business. treating it as your potential future livelihood. And for many people, it is. And so for them, it's a very serious thing, of course. And that is why I would always say, don't trade with money that you cannot afford to lose either, okay? So you must know that going into a trade, there's always, as I've said, there's no 100% chance that you're going to always win. There's always a chance that you might lose that trade. And are you prepared to lose that money that you've just put up for that trade? Which is why, again, keep it down to 1 to 2% if you are trading. And T, it might be also that you are trading with too high a percentage equity of your account there, going in 10% and then wondering, being stressed about that. If you're trading at 1 or 2%, you know that if you did lose 1 or 2% of your account on a trade, that's not the end of your trading career. You've still got 98% or 99% of your account still there, right? So consistency is what we're looking for. Being risk averse is what we're looking for. Okay, sorry, Emir, was there any others?
There was one more, let's take this one from Chris, related to the lesson that you were just going through. Is one-to-one the most efficient risk to reward, or can I use different?
Yeah, you can use different. Now, I'd suggest 1-to-1 or 2-to-1 or 1-to-1. Now, the reason I got it at 1-to-1 at the moment is because I know that it works with these systems that I've given you, right? So different systems, you might be looking at different types of risk to reward. But at 1-to-1, you've got a reasonably good chance, a fighting chance of saving your account and making money, especially when you've got a high win rate. And that's what these systems give you, right? So it just depends. If you're saying, generally, it might be true. It's for some, it might be true for others, the exact opposite, a higher one or a lower risk to reward. But for these systems that I'm talking about today and many of my other systems, I'm looking at least a 1-to-1. So I'd say at least a 1-to-1. But you might find that your targets are not hit as frequently if you have 2-to-1. You're looking at twice the distance to reach that target, and the market could easily turn. A news event or something comes up, it could easily turn against you. So you want to try and keep them relatively tight in this market if you're a beginner trader on the major pairs, as I mentioned yesterday. So, I can't force anyone to do any other way, but my suggestion, and you'll see it's also set out in the systems, is use for these a 1-to-1. And there might be times that you see that price goes further ahead and you might have been able to take a 2-to-1, and you might say, oh, if I was at 2-to-1 now, I would have made, but there's going to be other times that it goes in the exact opposite direction. And then you say, thank goodness I had my target set at 1-to-1. Okay. And more times than not, that will be the case. So hopefully that answers that. Anything else, Emir? Otherwise, I'll continue now.
I think let's continue. Yeah.
All right, because I don't want to keep everyone on here too long. But let's look at the second free system then for today. It's called the Astral Trend Finder. Now, this system, I'm going to give you the link to go to at the end of this presentation. I'm excited to give this to you today. And after all I don't want to come across as if I'm preaching to you, right? I don't want to do that. I'm trying to have a discussion with you, and I'm trying to be honest with you and saying these are the things that happen that traders should avoid, and that you might find yourself amongst this lot, and that is why you're not being successful. So I'm excited to give you another system today called the Astral Trend Finder. It's just been put up a few hours ago on our page at www.acceleratingprofits.com. Don't worry, I'll share the link again with you at the end. And on that link, you will also find a manual, a template to install it on your MetaTrader 4 platform from today. So I realize most likely the vast majority here have not had a chance yet to look at this. So I'm just going to run through the rules of this on this presentation, and then please do go and have a look at it, put it up on your chart, and I'll mention more about that in a moment. So the Astral Trend Finder, it's a one-of-a-kind system. It's very easy to understand, in my opinion, and you can achieve a very high success rate with it. Now, along with a few standard indicators, I'm trying to keep this simple for you, as in I don't want to clutter the screens. This system uses a couple of custom indicators that we have put together for you. You will have to install them on your MetaTrader 4 platform to trade the system. Once these are already set up on your charts, you'll be ready to go, right? So it's going to be a plug and play, so to speak. Put it on and there we go. It's user-friendly, it's practical, simple. There are only two types of entry rules, buy and sell. You're either going to buy or you're going to sell into the market, right? And it works on all time frames, from the 1 minute to the 5 minute to the daily. Unlike other systems, you will have the power to choose your preferred time frame, which you think works best for you, as mentioned yesterday. For those of you who are working day jobs, perhaps you want to do the higher time frames, use them 1 hour, 4 hour daily. For those who are looking at monitoring the markets for considerable time during the day, you might want to look at the 15-minute. I'd suggest whenever you're trying any system, try it on the 15-minute to begin with, right? And practice it on a demo account, of course, at first, just like the Profit Wave. Until you're familiar with it, practice it on a demonstration or paper account first. The 1 minute and the 5 minutes are extremely fast, and you'd have to really know what you're doing as far as the rules are concerned, excuse me, and getting in and out of trades on those. So try it out rather on the 15-minute. But it is possible to trade it on all time frames. I also recommend, as I mentioned, the 1 hour. So 15 minutes during quieter sessions, if it's very volatile, on the 1 hour. It's profitable for different types of trading strategies. And you can be a scalper, a day trader, that's a long-term trader. More short-term, you're just trying to get a few dollars out of the market quickly within 10, 15 minutes. Or a day trader, you're waiting for the trade to play out during the course of a day, or swing trader and so on. So, wherever a person would fit in, it should fit in for you. Now, the components of the system, it consists of custom and standard indicators. Here's what they look like on the chart, right? So just an image here. We've got what's called an astral line, and you'll see that over here, pointed out here. It's a line that will be seen on the top of your chart. And this line here will either be blue or to be red. And I'll get to that in a moment. So there's a line. You've got an indicator called the Heikin Ashi. It's a popular trading indicator, freely available, but we're using that in combination with these others. And it is on the template that you will install. So it will automatically apply to your chart once it's installed. So you don't have to try and figure out where to find it. And we've got another line here, which is a moving average. And I'll get into that just now. So there's two lines on the main chart. One we call the astral line, another's a moving average, and we've got a Heikin Ashi candles here. Then at the bottom, we've got a price oscillator. So basically, this is just an oscillator. It moves up and down, and I'll get into the rules for trading that in a second. So these are color-coded, as you've just seen. And when the astral line, Heikin Ashi, and price oscillator all change their color to blue, it means that we can start looking for buy trade opportunities. So blue is the color we're looking at for buy. And when they all change color to red, it means that we can start looking out for sell opportunities. So let's go through the rules quickly. Number one, the astral trend line must turn blue. So just there, you would see that it had turned blue at that stage, or it was blue. And secondly, the Heikin Ashi must turn blue. So that's these lines over here, these candles, so to speak. These are blue, right? The price oscillator must be blue and be above the zero level. I think I've missed one out there. Sorry, it was number two. The astral trend line must cross above the moving average. All right. So let's repeat. The astral trend line must turn blue. The astral trend line must then cross above the moving average, which is this other line here. So it would have crossed above it, would have gone below and crossed above. And then we need to see that the Heikin Ashi is turned blue and that the price oscillator below is blue and above the zero level. Now you'll notice that there's a dark blue and a light blue. The darker the blue, the stronger the signal. But it's just as valid if it was the lighter blue color, but it just gives you a bit more confidence if it is darker blue, right? And then we would enter the buy trade at the close of that candle where all of these conditions are met. So we would have seen the line crossing upwards, blue, and the Heikin-Ashi blue and this blue. And at that point where all of those were in alignment at that candle, at the close of that candle, once it finishes, we would enter a trade right at that spot. Then we'd set our stop loss a few pips below the most recent swing low. This would be a swing. You can see it as the V shape there. That would be the stop loss there. And our take profit would be set the same distance away. So that's our risk down there by the stop loss. The same distance away from that, we would set our take profit level for a 1-to-1 risk to reward ratio, which we spoke about earlier, right? So it's a 1-to-1 risk to reward ratio. Now let's have a look at the short trade rules, and these are exactly the opposite. So we have the astral line turning red on a downward trajectory here. It's turned red. We've got the astral trend line has crossed below the moving average. So it turned red and it was below. It had crossed already, but it was below this moving average. The Heikin-Ashi has to be red. And then the price oscillator must be red or orange and below the zero level. So as I mentioned, if it's bright red, that's a very strong signal at that point, less so if it's orange. Both are still valid. But at the time that you're entering, you want all four of these conditions to be met. You would then enter at the close of that candle upon which all of these conditions were met, and you would then set your stop loss above the most recent swing high. Most recent, the highest point closest to you would have been there before there was a dip, right? So that's just a little bit above that. We're going to set our stop loss, and we're going to take our take profit at a 1-to-1 risk to reward ratio. So equidistant, same distance away as that. The stop loss from entry, we're going to have the take profit from entry. And let's have a quick look at another example then. So here we see that the astral trend line turned blue. The trend line crossed above the moving average. It was already above it earlier. The Heikin-Ashi was blue. The price oscillator was blue and above the zero level, which is when it would be blue. And then we would have been able to enter the trade at the close of the candle, exactly where pointed out there, where all these conditions were met. And I've gone backwards. Yep, and we set our stop loss a few pips below the most recent swing low point, and our take profit at a 1-to-1 risk to reward ratio. And as you can see in this example, it took a while, but eventually the price was hit. And this was on a 15-minute chart. So each of these candles here represents 15 minutes of time. And we could see that it took 1, 2, 3, possibly just about 4 hours for that trade to play out. Not bad. And here's a short example for you. The astral trend line must have turned red, which it did at that point. The line must have crossed below the moving average, which it also did at that point. The Heikin-Ashi must have turned red, which it did also at that point. The price oscillator must have turned red or orange and be below the zero line, and at that exact point it was already showing red. Now we'd enter the trade at the close of that candle. We'd set our stop loss above the most recent swing high, just above it, 2 or so pips above. And we'd set our take profit level equidistant from entry as the stop was for a 1-to-1 risk to reward ratio. And then I can get now onto the Q&A. I think I must mention here also that very often, you might see systems that have some kind of an entry point. Perhaps they tell you more or less what you should be targeting. Perhaps they tell you where your stop loss is. But there's 3 crucial things that every system should have, and that if they don't have it, then you know that you are risking a lot on that system. And the one is you must know exactly where to enter the trade. It must give you a reasonable chance of determining where do I actually enter the trade, because that's what one of the most logical questions would be, right? The second is you've got to know exactly what you're targeting. So in our case, we've got the rule set at 1-to-1, but for others, it could be just left open-ended, and so any system that you're looking at, you want to know, where am I entering, where am I exiting, as in what is my target? What am I targeting? When would I get out of the trade? When is sufficient to get out? And what is my stop loss? Where do I exit from the point of view of my risk? What percentage risk am I taking? Where do I set my stop? So unless you've got the answers to those three questions, then I very much doubt that you've got a good system in your hands. And hopefully by looking at what I've shown you now, that you can see that at least we've got those set out for you and have done our own tests. We've got a good win rate also. We've been told, how much what I think you should be trading with your risk per trade, with your equity at 1 to 2%. And similarly, with this system, and we don't have time to go through it right now, but if you have been on my presentation yesterday, or if you want to go back and watch the recording of that, with your support levels, they can give you an extra confirmation also, right? And in tomorrow's presentation, I'm actually going to give you another form or pattern that you can look at with any trading system to determine as extra corroboration of whether you are in the right direction with your trade, or whether you should enter the trade. And so that'll be interesting tomorrow. But for now, any questions for me on that?
Well, since we covered couple, I thought maybe we could just, these are not questions per se, but more of a comments. So Mike posted that he already installed it about an hour and a half ago. I have 2 trades that just went into profit. So
well
nice.
done, Mike. You're multitasking, that's for sure. That's good. Excellent, Mike. And
and from Neville, just in a sell trade on 1 hour Euro USD.
Oh.
And we also I have already downloaded the system, and it's wonderful. 2 smileys.
All right, excellent. And I know that a lot of you will be waiting to go and get that right now. So I'm just going to continue here. Let's check those poll results, yes, before I forget. And I just have to lean in a little bit here. Sorry, guys, because I have to see what's on my screen here. So let's just cover what was asked there. What is the biggest trading challenge to you right now? It looks like, let me share this with you as well. I'm sharing the results. So hopefully on your screens now, you'll have this little pop-up box come up again, and it'll tell you the results. Everyone see that? What is the biggest trading challenge right now? It looks like the majority here have answered, I haven't had a good trading system in the past. All right. And secondly, from there, I don't have a mentor. I don't know how to trade. I don't have money to start with. None of the above. So there are a few that have other issues, and many that have all of the above. But it looks like the biggest one here is the system, and then the mentor. All right, so it's very similar to what I had just gone through after we did the poll, right? Saying that having a good mentor, having a good system is vital. So I'm glad to see, in a sense, that this is reflecting also what I already know to be the case. And have you traded the profit wave yet? This was just out of curiosity. And no. So the majority, 64% have not traded it yet. 36 have. Remember what I said earlier, guys? You've got to take that step. I'd like you to do that. I'd like you to take that as part of your learning experience, putting a system on the chart, a good system that I know actually works, otherwise I wouldn't give it to you, and then trying that out. So for the 66% of you, I'd like you to do that as soon as possible, please. And we are currently using Zoom for this presentation. Please indicate your preference. That's a huge percentage, 93. Well, that's overwhelmingly in favor of that, almost unanimous, would prefer to stay with Zoom. That's interesting. Thank you, guys. That at least helps me going forward. If everyone was battling with Zoom, then I would know that this is not the way to go. And do you have a Facebook account? Out of curiosity, because I know I'm streaming this on some of the platforms, and I do share some information also on Facebook. So it's just interesting for me to know that at least, what is that percentage? 66% of you do have a Facebook account. Thank you for that. So I'm going to stop sharing those results right now. And thank you for participating in that, that poll. So action steps, we get to this point in our presentation where I want you to take a few action steps. One of them is definitely, guys, go and download the gift and the profit wave if you have not yet done so at acceleratingprofits.com. And if you could just put, Emir, could you just put that link in the chat for everyone, please?
I just did, yes.
All right,
yes,
thank
thanks.
you. Acceleratingprofits.com. So on that page, you will find the recordings for the last couple of days of this challenge, as well as the profit wave, and now also the Astral Trend Finder. So a nice little gift there for you guys. And when you have made a trade, again, I'm going to ask you any trade using the system that I'm giving away today or the profit wave system either, please do email it to me. I'd like you to take that action step, and it can be a snapshot like one person did with their camera. It can be a screen print or something along those lines, just anything to show me that you've taken a step in trying to trade it. It doesn't have to be a winning trade. Don't feel embarrassed if it's a losing trade. I just want to see, have you taken that step? All right. And you can email it to support@acceleratingprofits.com. Perhaps, Amir, if you could also share that with everyone in the group here, please.
Okay, no problem.
Thank you. And you could have the subject line just to read 5-day challenge trade. And I have my support team on standby over the next hours and days to look out for any emails that do come through, and they get sent directly to me with these snapshots, right? And I won't disclose any personal information from you, so don't worry about that. But I do want to get an idea of how many people are trading and how it's going with your trading. Now, in the next few days, remember also that I will select a few of you that do that to get a free $250 system from inside my secret trading vault. So just by doing that, you set yourself up to perhaps get a free $250 worth system. Now, the systems I'm giving away free right now are very valuable also. These systems that I'm talking about now are disclosed only to a few people that are inside what I call my secret trading vault, and they are not disclosed to anyone else. So please remember, by doing that, that you're in for that. And also remember to leave a comment for me, please. I've seen so many great comments, and thank you so much, guys. Many of you are on here, have obviously been commenting. And at acceleratingprofits.com, I've had well over, it must be close to 200 now, I think, comments on there. It's great. It gives me the indication that you guys are partaking. It tells me a little bit about whether or not I'm making any difference. And it also lets me know if you are struggling or that you are doing well. It's my only way to gauge really how you guys are doing. So I'd really appreciate that. And just for doing that over the course of the whole presentation, the challenge, you will also be setting yourself to perhaps be one of a few people that will be awarded a free gift valued at $750 for doing so, right? So there's two different things here. By emailing in, you're going to get a potential $250 secret trading vault gift system. And by also commenting on the page, you also stand in line. You could be getting both or just the one, but you have to be in it to win it, so to speak. So you have to leave a comment. And closer towards the end of the challenge, I am going to choose a few people that will be awarded the $750 value as well. So tomorrow then, I'll share with you more as we cover some more training. As I mentioned earlier, I'm very excited about that. And we are moving along nicely now with our challenge. So please join me tomorrow. I've got some very interesting information for you. I've got some very interesting techniques that you can use, whether you're a beginner or an advanced trader. And I want you to also stay disciplined. Try and, if you've attended today and you're able to attend tomorrow, try and stay disciplined. As I mentioned earlier, it's good for your learning experience and for your future abilities as a trader to do that. So remember that you can register for that one with a new Zoom link. It'll be up within a short while after this presentation, together with the recording of this presentation. You'll find a little button that should say tomorrow's date. You click on that, just like you did for today, and you'll be able to register at www.acceleratingprofits.com. So that brings me to the end of my tonight. It was quite a lengthy presentation, but I'm glad I got to at least answer some of your questions, and I hope that I made some kind of contribution, some kind of value in the short time that this is, in fact, to talk to you guys. Thanks for being on. Thank you. And it's nice to see Suzanne. Is Suzanne a lady here with us? That's great.
I was just about to say, here's a couple of comments before we end it. Thank you, Adrian. Great job. Thanks for the education from Farah. Thank you, Adrian. Ivy, thank you so much, Adrian. iPad Suzanne, brilliant presentation. Thanks. Colin, thanks very much for everything. Great presentation, very valuable content, much appreciated, and so on. So thank you guys so much. I hope to see you tomorrow. It's, as usual, same time, same place. Day 4. You can grab the link on acceleratingprofits.com. Also, you can grab your downloads there and watch any of the reruns of the previous webinars, including this one. I think it should be up in a couple of hours tops. So if you missed a part of it or anything, you can always come back and watch that. Otherwise, thank you so much for joining. It's very inspirational to see all of you guys here. So again, thanks so much, and we'll be seeing you tomorrow.
Yeah, thank you, Mir. Thanks, everybody. I'll see you tomorrow. Goodbye.